Hello and welcome to our discussion on the traditional versus variable income statements. So when we talk about an income statement, we're talking about a statement that shows the revenues and expenses of a company across a certain period of time. This period could be monthly, could be quarterly, annually, whatever the case may be. Now, we generally talk about the income statement in financial accounting from an external perspective. However, even internal users such as management need to know how profitable their company is, so they need to be familiar with this statement. Now, in understanding the different types of income statements, it's first important to understand the different expense classifications. So we have a variety that we've gone through in other lectures, but the two we're going to be talking about here today are the product versus period costs and the fixed versus variable costs. So what we're going to see is that these two classifications, we have two different types of statements. Each of them use one of these two different types of classifications. So we're going to tie this discussion in with cost, volume, profit analysis. With that particular analysis, we're more concerned with fixed versus variable cost, that classification, as opposed to product or period costs. So we're going to see how that CVP analysis fits into one of these types of statements. Going back to our traditional income statement, this is the income statement that you would learn under financial accounting. The focus here is product versus period, regardless of fixed versus variable. The product costs that we're talking about, once we sell the product, it gets converted to cost of goods sold. That's the expense. So that's the determining factor here. Gross profit is the subtotal. So what I'll tell you is anytime you see gross profit, you know that we're dealing with this traditional income statement. And likewise, you'll see cost of goods sold. So we have sales minus cost of goods sold equals gross profit. And then we subtract out our operating expenses, which could again be variable or fixed. We subtract them all out, and we end up in this case with a net income of $50,000. So now let's move over to the contribution margin income statement, or the contribution income statement. The focus here is now on fixed versus variable cost, regardless whether it's product or period. So notice we start off with sales, and now we subtract out all of our variable costs, both variable product costs as well as variable selling and administrative. So that's a little unusual when comparing it to the other method where we did not have anything selling and administrative above the line. Now we have all variable costs first, and then the difference, or the subtotal, is going to be the contribution margin. Now, you may recall when we talked about CVP analysis the first time, the whole point of the contribution margin is to find out how much money you have to contribute to paying down the fixed expense and eventually leaving you with profit. So in this case, we have $200,000 contribution margin, and then next we'll list all of our fixed expenses that contribution margin is intended to cover. So these fixed expenses include our fixed manufacturing, which would generally be the fixed manufacturing overhead, and then fixed selling and fixed administrative costs. Notice the end result is going to be the same. We still have net income of $50,000. It's just a question of how do we categorize it. So again, you're still going to have sales at the very top. You're still going to have net income at the bottom. You're going to have a subtotal, but it's going to be a completely different subtotal. And then, of course, the question is, how did you distinguish between the first and second level costs? Under the traditional method, the first cost is your product cost. Second cost is your period. Under the contribution margin statement, the first cost is variable cost. The second cost is fixed cost. So you only use one of the classifications for each statement. It's either product and period or fixed and variable. The key challenge to this is remembering for each of the statements which categorization do you use. Now, there are benefits to each of the methods. For the contribution method, basically, the main benefit here is that we can use our cost volume profit analysis with this method. One of the components of cost volume profit analysis is simply break-even analysis. This allows us to focus in on the change of activity level. We sell more units, we sell fewer units, and we can focus in on how it impacts cost. Because keep in mind, we know that a change in activity level should not impact fixed cost. It'll only impact variable costs. Now, the traditional method, the benefit of that is that it allows us to focus on the production inputs, and it allows for better cost control, because then we know, is it our production area we need to make more efficient, or is it the selling and administrative type area that we need to make more efficient? Which type of overhead do we need to control? Thank you for watching my accounting video on YouTube.com. I hope you've enjoyed that information. Accounting can be a difficult topic to conquer, and sometimes you just need additional information or assistance outside of the classroom. If you feel like you need some additional information, some additional resources, come visit my Udemy.com course. I have a variety of financial and managerial cost accounting courses available that may be able to assist you if you're having trouble with a particular course. In these courses at Udemy.com, I have additional lectures on a variety of accounting topics. We also have downloadable Excel templates for all of the various practice exercises we work, as well as a video walkthrough of the solution. I continue to update these practice exercises, so even after you join, you may see some new exercises. It's all geared toward helping you to understand the topics. So in addition to those additional lectures and the practice exercises, we also have quizzes and tests to help gauge your understanding of the topic. That may give you a better idea if there's something you need to go back and learn a little bit more about, read more about, watch a video on. We also have downloadable study notes that really try to drive that home. There's a downloadable textbook with it. So feel free to come join this class, come take a look at it. You can find this at udemy.com if you search for Severson, or you can just Google Severson Udemy Accounting to see a list of all the courses that are currently available. Again, I'm working on new courses as we go. Right now you'll see some financial and managerial accounting courses out there. I'm working on the intermediate and advanced side of those particular courses as well, so you may see new ones out there as well. Now, email me for a special 50% off coupon code. You can send an email to chrisseverson@hotmail.com, and I will respond with that code. It's a different code for every course, depending on which one you want. I can also respond with the actual link to that course. Now, all courses at udemy.com have lifetime access, and there's also a money-back guarantee if you're not satisfied. So come check out my course at udemy.com and see if it may be a fit for you. Thank you for your time.